Welcome back to The Wave. I'm Frank Shi. U.S. President Donald Trump has revealed tariff rates against countries enjoying trade surpluses with the states, while Thailand is aiming to reduce that rate below 20%. The outcome right now of tariff rate on Thailand's products remains at 36%. Joining me now is Dr. Andrew Staples, founder of Geopolitical Asia, and Trin Yon, senior economist at Analyses, to give me insights on Thailand's challenges amid tariff tensions. Thank you for your time to give me analysis. And I think at the beginning, I want to talk to Trin first about your analysis on Thailand's products right now. What are the impacts on Thailand's position right now following the U.S. authorities' decision to maintain a 36% tariff on Thai products?
Well, I think there's room to negotiate that down. Obviously, if you look at the Vietnam deal, the 10% is a floor. It can get somewhere between 20-ish level. So I think there's definitely room, and the pressure is really to negotiate this further. The question is, Thailand is in a very different position than Vietnam in that domestic politics is quite challenging. So it is probably refraining from facing backlash. One of the things that Vietnam had to give up is really opening market access to the U.S., whereas the art culture sector is an important sector for Thailand. And given the fact that domestic politics is quite challenging at the moment, the question is whether or not it will give the concessions necessary to lower the tariff level. The second consideration is actually, in fact, perhaps, given the fact that domestic politics is so murky, the way for Thailand to really escape its situation at the moment is really it has to grow outward. Tourism is certainly not doing so well, but external demand can be boosted. Domestic demand is softening given the demographic issue and household debt. So for Thailand, the U.S. market remains very key. So perhaps given that, they would be even more motivated. So that you can look at it as a silver lining playbook, so to speak, that the domestic situation can push it forward to get a deal ahead of the August 1st deadline.
Yeah, you already talk about key implications here in Thailand, no matter it's the domestic political instability and actually lowering that tourism income, and of course those foreign tourists to come to Thailand too. And what about you, Andrew? I think right now Thailand, actually our finance minister Pichai Chunha-Wachira right now still in Washington DC, and he said that 36% is not the final outcome. And what are the measures that Thailand can really mitigate the crisis, as in of course 5-point proposals here to increase more agricultural products or even buying more jets? What are your measures? What's your suggestion here for Thailand's government?
So I think what we just heard from Trin is exactly right. The figure that we have at the moment that's been communicated from Mr. Trump is not necessarily the final figure, and we would hope not. And surely that would sharpen the appetite within the government and negotiators there to see what it is that they can bring to the table for Washington in order to bring that rate down. We've got about 3 weeks for that to happen, so things need to move very quickly. But at the end of the day, it's going to be difficult to bring the surplus down to a point where I think Mr. Trump is going to be happy, no matter how many fighter jets you might buy or how much soybeans you might buy or whatever it is. One of the sort of driving forces of all of this is, of course, with reference to China. And we saw with the Vietnamese deal that there's a very different tariff rate for any goods that are deemed to be transshipped from China, i.e. those goods that are coming from China are simply being relabeled as made in Vietnam and then shipped out to the US market. That's a real sort of geopolitical imperative for Washington. So it'd be interesting to see what Thailand will be able to put on the table in terms of satisfying that particular need. Of course, they will need to tread a very fine line between satisfying Trump when it comes to the tariff rates and not annoying their neighbor to the north.
Right. And of course, I think Finance Minister-led Thailand team right now in Washington, D.C. also say that Thailand might offer 0% on U.S. goods on particular sectors, and we will see how it goes. And trim. So of course, now the measures that Thailand trying to give it to the US is to really maybe some benefits, more agricultural products. Also, you monitor in ASEAN and Asian economies too. Other markets also get lower rates than Thailand has at this moment. So how do you see that foreign investor, they might put their investment in Thailand already, and they see that power struggle, and of course the different rates on different countries too. They might move their investment or relocate to other countries which enjoy lower tariff rates. What's your sense?
Well, I do think that it needs to get down from the 36% level. The question whether or not it's in the teens or it's in the 20s, I think at the teens or the 20s, that's still operational. You know, what it shows, the Vietnam deal shows, and the climb down from the 46 is that the US needs trade partners if it's going to go hawkish on China. There is room for the rest of the region to play. Thailand has a medium tech play here that it can play, as firms will also need Thailand to relocate supply chains, especially on the higher end value chain. That being said, you know, tariffs aren't the only one. Of course, at a very high level, which 36% would be relative to Vietnam's 20. So we want to get to a closer level to what Vietnam has. And everyone has a floor about 10s anyway. So when we get to the 10s and the 20s level, it's a relative difference, right? Other factors are very important. Domestic politics, FX rates, investment environment, and so on and so forth. Incentives. So it is not a big game changer. A good example, if you look at Japan, a lot of Japanese manufacturers are saying, actually, in fact, at this tariff level, if we're okay with 145, 146 yen, it's much better than 100 yen, right? Because essentially, it's basically making your price very competitive. In other words, tariffs are key. You want to get lower from 36 to something a more manageable level. What's key is that it's much lower than China. Second thing is what President Trump wants, and what's very clear on the Vietnam wants is not so easy to allow rerouting. And I think it's very clear that for the Southeast Asian countries particularly, they're going to put that clause there to make sure that Thailand has an interest to effectively enforce the rerouting mechanism. It's not very clear how they do this in terms of rules or origins, but it's going to be a key sticking point. And so it will not be able to allow for transshipment of goods, and that delicate rebalancing between making sure that it has open market access to the US and China is going to be very important.
Amid this imminent risk, of course, I'm talking about tariff rate. Andrew, last time we have the conversations, we talk about actually intertrade. We talk about regionalization. But do you think at this moment how intertrade or regionalization will play out to mitigate the crisis that imposed by Donald Trump to this region?
It's a really good point. It's a longer term play. I mean, the immediate term is thinking about where the tariff rate is and trade this year, next year, and so on. A bit more longer term, then you're thinking about, to your question around rerouting supply chains, as Tring was just mentioned there. That's all going to be a lot of factors that go into that. Not just tariff rates, so will be important, but not just the only factor. Longer term, though, and this is something that I think we see around the world, whether we're talking about economic blocs, countries or companies, there's a big focus on doing what you can. And we know that within ASEAN, within the ASEAN free trade area, there's a lot of work that could be done to stimulate intra-ASEAN trade, which, to be honest, is pretty disappointing, even though we've had sort of 25 years or so of the ASEAN free trade agreement. That's a longer term play, and I'm sure that will be on the agenda at the ASEAN meetings. It already has been this year and will continue to be there. So thinking about ASEAN as a bloc, how could it deal with some of these challenges? Well, developing inter-regional trade. What does that mean for Thailand as well? Looking internally, domestically, at the competitiveness of the business environment. We've got the political situation, of course, but what else is there that could be done around infrastructure development, for example, around boosting the competitiveness of the Thai business environment?
Right. Back to your trend. Of course, we talk about foreign direct investment. You just briefly touch on it. Of course, so much new investment FDI coming to Thailand and coming to Vietnam and in the region too. And right now we have the condition of this tariff rate for Thailand 36%, Vietnam 20%, and Malaysia 25% too. So FTI, for those investments, do you think the shift around and across Southeast Asia, and how do you expect the FDI flows to the region? Maybe they will choose Vietnam rather than Thailand because of tariff rate. Do you think so?
Well, I do think, again, as I mentioned, I think there will be a clamp down from the 36 level. 36% is pretty high.
Yeah.
And for Thailand, it is very motivated to do this. So I do think that they'll get lower. Whether or not the company choose Thailand over Vietnam, it's a very different consideration. Let's assume that they can get to a comparative level of tariff in the 20s to the high teens level for Thailand. Then you have to have other considerations, right? The demographic profile of Vietnam and Thailand are very different. The different competitiveness is very different. The domestic politics consideration as well. For Vietnam, it has stable politics, which means the government can put a lot of focus into attracting FDI and incentives. And Thailand can do that as well, but it's a bit more distracted. It's focusing, if you look at the fiscal debate, it's focusing more about the stimulus, the handouts, to maintain this fragile political situation. So I do think that there's plenty of room for Thailand to attract investment. Tariffs is one consideration, particularly if the tariffs differentials are so huge. But if Thailand can lower its tariff to where it's still very competitive vis-a-vis China, and stay out of the crossfire, then it can still be a very competitive place. But that being said, tariff is only one consideration when investors think about FDI. The second one, of course, is whether or not the Thai government want them to come and willing to do whatever it takes to make sure those investments are profitable. And I think tariff negotiation is part of that, right? The lowering of 36% is not just about Thailand exports to the US, it's about the Thailand investment in Thailand. Thailand is the thesis to ship out your goods. And I think as a result of that, given the fact that other sectors are so stressed, that the Thailand government is going to put a lot of effort to lower this level. And that's an easier thing to do than trying to reshuffle the whole economy.
Yeah, to balance that point there, of course, I think Thailand's Board of Investment already announced that the second quarter of this year, we have seen one of the highest FDI amount to come to Thailand too. So actually, we see some measures and policies working there to balance that threat at this moment. Very quickly to you, Trin, because of course SCB or Kasikorn Bank in Thailand already said that if the 36% tariff rate continues against Thailand's product, we might see only 1% or below 1% GDP growth in Thailand. Do you think that's warning for Thailand's economy?
Absolutely, and I think that's a key reason, given the fact that growth is so slow, that 1% for Thailand is a much bigger deal than the 1% for a country like Vietnam, where it's growing at 8%, right? So I think that warning is to give another push, not just Trump's threats, but also from the Thai side, that this is a high margin business and it needs to preserve it. And as a result, I'm quite optimistic that Thailand will be able to negotiate this lower. The question is what it will have to give and what it will willing to give without paying significant political fallout to do so.
Right. Back to you, Andrew. I think your analysis, of course, your expertise on geopolitical issues in this region too is very significant for our audience. Just want to understand, of course, Malaysia is what I said. Malaysia, Vietnam, Malaysia got 25%. Vietnam got 20%, Thailand 36%, Cambodia and Myanmar, of course, Myanmar at 40% too. How do you analyze it?
So I think there's various ways that you could have a look at all of this, but you could certainly be looking at the role. I mean, we have to go back to, as I mentioned earlier on, the role of China within all of this and that sort of strategic and geostrategic intent of America to try to get China out of supply chains. where you look at where China has a lot of influence and not just economic but political influence. Of course, you're going to see that in places like Cambodia and Laos. Less so in other parts of the region as well. So that's one of the sort of important geopolitical overlays to be considering. Just going back to your point on sort of rejigging of supply chains, of course, we need to think about the sector. If you're thinking about electronics, if you're thinking about auto sector, these have big, deep, very sophisticated ecosystems around us. It's not easy to pick them up and relocate them. And as we just heard, tariffs are one part of that, but domestic demand, currency fluctuations, all the rest of it come into those decisions. I wouldn't expect to see any major decisions at the moment. There's way too much uncertainty. But certainly companies should be looking at those different scenarios about longer term where they might want to put their bets. And that's not just in terms of commercially, but in what camp do they think that they're going to find themselves when it comes to US and Chinese tensions that we have there as well. And I think just sort of one final point, thinking about the rejigging of supply chains. One of the other sort of major components is I think, as I just mentioned about sector, if you're anything to do to tech, with technology, I should say, so semiconductors, and actually semiconductors are under that sort of Section 232 investigation as well. And that's not just limited to semiconductors. You've got lots of electronic goods in there as well, from smartphones to computers and so on. Then that's another sort of overlay that you're going to be looking at, in addition to what the tariff regime of that particular country is going to be.
Yeah, to your point, of course, Donald Trump yesterday also talked about the additional 10% tariff on BRICS countries. I mean, countries working with BRICS on anti-America major policies there. So, of course, thank you for your time, both of you. I think this time we got so much sense about Thailand's position in ASEAN and in geopolitical issues too, and on global stage. So thank you for your time. Dr. Andrew Staples, founder of Geopol Asia, and Tring Yon, senior economist and ethicist. Thank you so much.
Thank you.
Thank you.
More news to come.